Why should you be investing even if you feel late? So let me guess. You look at the stock market, you look at Bitcoin, you see the charts that already went up, you hear the stories of people who started years ago, and you think to yourself, dang, I missed it. I'm too late. I really should have started earlier. There's really no point now. So you do nothing. And here's the truth that many people probably won't tell you. Feeling late is the number one reason why people never start investing. And that single thought will cost them millions upon millions of dollars over a lifetime. So today I'm going to break down to you why you should be investing even if you feel like you're late to the party, and why waiting longer is the mistake that you really just never want to make. So let me start off like this. Every investor feels like they're late. You know, I hope that this will calm you down when I tell you this. Every single investor feels late. People who bought Bitcoin at $300 felt late. People who bought it at $3,000 felt late. People who bought it at $20,000 felt like they were late to the party. People buying today feel late, and I'm pretty sure it's either at 89 to $92,000, at that range. Same with stocks. People thought the S&P 500 was too high in 2010, too high in 2015, too high in 2020, too high today. Yet over time, it kept going up and up and up. And feeling late doesn't mean you're late. It just means you're aware of things. And awareness is really the first step to action when beginning investing. You know, the market doesn't really care about your regret. It doesn't really reward your regret. It doesn't care about what price you wish you bought it at. It only rewards one thing: time in the market. Not timing the market, but time inside of the market. People waste years waiting for the perfect moment, right? They wait for a dip, they want confirmation, they want certainty that this is going to work out. But in life and in the stock market and in all things, there's no perfect time. It's only now and later. You can't go backwards. You can't focus on backwards. You can only focus on the now and what could be. And later is almost always more expensive than what it is currently. The real cost of waiting for these things is really insane. Like, people focus on the risk of investing, but they ignore the risk of not investing. Inflation quietly will eat your money year by year. Your savings will lose purchasing power. Time will pass whether you act on it or not. Waiting will feel safe for you, right? But the most expensive decision, you know, it's really just the most expensive decision that you can make. Because every year that you wait, you lose, compounding, the compound interest. You lose the experience of knowing what you should be putting your money in, or what, this exact stock does, or what it's for. You lose confidence, you lose growth, you lose momentum, which is really important. The biggest investing mistake isn't buying at the wrong time, but it's simply just not starting at all. You don't really have to start big when you do these things. This is where I feel like a lot of people get it wrong. They think if I didn't start early, then I need to make a lot of money now. But no, you don't need a lump sum of money. You don't need the perfect knowledge. You don't need to time the market. You just need consistency of maybe a dollar. Start off with $1 a day, $10 a day, $5 a day, $20 a day, $50 a week. Just small amounts that can be invested consistently. It's been, I feel like, proven that that's the smartest way to go about it, because you don't want to put all your eggs in the basket too early, and then not have enough money to eat dinner or pay your bills, right? You know, Just do small amounts, consistently, and then I feel like that just beats big amounts invested emotionally, that's how people will build wealth. That's how average people will build wealth. So what you should be doing, like I just said, dollar cost averaging, it fixes the late problem that you might be having. Dollar cost averaging, is the antidote to fear because you're only putting in a little bit, like you really miss that. And it's not like you're losing that money. You're just putting it in a safer place for it to grow. It's, yeah, you stop worrying about the price. You stop, trying to time the tops and the bottoms of the market. You stop trying to, obsess over it as much as you are. You buy when it's up. You buy when it's down. You buy when it's boring. You buy when it's scary. And over time, your average price will just work in your favor. And this is how people quietly win the investing game. Not by guessing, but merely by just showing up and, participating every day, every week, every year, every month, whatever. So, why do late investors often win? Some irony here, I feel. People who feel late often make better investors. Why does that? Why is that, Because they're cautious. They're very intentional with their investments, what they're putting their money into. They're really thinking long term over things. They're not chasing hype blindly like maybe some people are. They're more likely to invest steadily, avoid overconfidence in certain things, ignore noise that people bring to the table. They can hold through drops because, they're just putting in little amounts. So what can it really hurt them? They stay disciplined, most importantly. If you don't have any discipline, then how do you expect to really progress in even a lot of things, even in life? Being late doesn't ruin your future, but quitting before you start does. So, what do you do if you feel late to the party right now? How do you fix this? You know, I would tell you that you just need to start today. Like, cut the BS, cut all that out of the frame. Find things, do some research, watch some videos, read a book, please. Like, just start today. It doesn't have to be perfect. Just open the account, make your first deposit, because action will just override all that fear that you're fearing and feeling right now. you know just make it automatic. If it's automatic, then your emotions can't sabotage it over time, and you want to work harder because you feel the money trickling out. So you already have money growing, and you have money trickling out of your, I guess, regular account that you're holding it in and shifting it to, if that makes sense. Just automate it. Dollar cost average. Focus on your long-term assets, things that you're gonna actually, see an increase in 5 to 10 to 20 years. Index funds, ETFs, Bitcoin. um Bitcoin is really one of the only crypto ones I would say to go for. This isn't ever financial advice, but you know I would say go with that one because you'll get the highest returns, and it's limited. There's only a limited amount, so it's the best in my opinion. But what's my opinion? I've just done a lot of research, I feel like, and I think a lot of people would agree with me on that front. But just assets with history, assets with momentum that you can see, on the incline and that are globally used, such as Bitcoin. But yeah, ignore the short term noise. Daily moves don't matter, but decades do. So if a stock does drop, just remember it. Don't panic. Do not be startled by things like that, because it will go down, but the chances of it going up are very good if you've picked the right thing to put your money into. You know, you will definitely want to increase your contributions over time, because as your income rises, you'll definitely want to put more back into the market so you'll be able to receive more later on. You know, and really most importantly, man, just stay in the game. Don't give up. Like wealth isn't built by brilliance. It's built by staying. It's built by staying firm in your tracks and just staying through the downturn, staying through all the drops. Like it's really really important that you do that. But you're not late, you're just earlier than the version of you who never starts. Think about it. 5 years from now, you'll probably look back at this and think, man, I'm so glad I watched that TNL video. I'm so glad I started. I am up. Like, you're going to be so excited. You're going to be so happy. You're going to be so proud of yourself. And you're just going to be proud of yourself that you stuck with it. Like, you're going to be proud of yourself that you built that discipline to put the time into things, to really hone in on your abilities. Or you'll just think that, man, I wish I had started back then. Dang, I wasted so much time not doing what I was supposed to do with my money, with my finances. Those are the only two outcomes there are. The market will keep moving, time will keep passing, prices will keep changing, other people will be made millionaires, and other people will go broke. It's just how things are. The only question is whether you'll be participating with this. Because investing isn't about timing the market. It's about timing your decision to stop waiting. And that decision starts now. Thank you. It's TNL. I appreciate y'all. Like, comment, subscribe, and I'll see y'all soon.